Benchmarks hold near day's high as the Nifty surges beyond the 25,700 mark while broader indices extend gains. The volatility index cools off by over 5% as IT stocks lead the gains. Most sectors advance while metals lag. A week after concerns over disruption from Anthropic, Infosys has partnered with the global giant to roll out enterprise-grade agentic AI, starting with telecom. They will build industry-specific AI agents, integrating Infosys Topaz with Claude models to automate workflows, modernize legacy systems, and accelerate software delivery. Hindalco slips after Incred downgrades it to reduce, warning of a possible 20% fall in aluminum prices and heavy capex-led pressure. Cochin Shipyard jumps after winning a 5,000 crore rupee Navy vessel order, while TVS Supply ties up with Italy's ALA Group to tap India's fast-growing defence and aerospace market. Ola Electric extends losses after Citi downgrades the stock to sell, slashing the target to 27 rupees. It is citing slower EV adoption, rising competition and market share losses. It's also flagging cash burn, rising debt and delayed recovery in profitability. Hello and welcome. You're watching Closing Trades on ET Now. I am Snehisha. We are going to be tracking the last lap of the market trading session today. Just taking a look at how we've fared so far, and pretty okay is how I would term the day. We've seen a little bit of a fall at open, recovered from there, saw a little bit of a dip once again, and we're trying to recover from there. Although in the last few minutes of trade, Nifty 50 has seen a little bit of a decline. Nonetheless, we continue to trade in the green, about 0.1% higher, 25,720. So we're at least above the 25,700 mark on the benchmark. Sensex 0.2% higher. It's Nifty Bank that is doing well for itself. 0.3% move over there, and the India VIX is the one to watch out for today. We've seen 5.25% cool down coming in on the India VIX today, so that is also looking slightly healthy for the market. I'm just taking a look at the broader end of the market right now. The mid cap space is doing well, about 0.2% uptick coming over there. The small cap market, or the small cap index rather, is doing all the heavy lifting in the market today. A 0.5% uptick coming in on the Nifty small cap space today. So that index is looking very good. If you take a look at some of the Nifty winners, of course, all eyes are today on Infosys after they've announced the collaboration with Anthropic for enterprise-level AI systems. Infosys is up 2.8%. You have other IT names like HCL Tech, Wipro, TCS that are doing well on the back of that. Other than that, from the Nifty group of stocks, it's ITC doing very well today on the back of a BNK channel check suggesting that ITC has already taken significant price hikes and now it will be able to sustain the impact of the excise duty from the government. It should not have any hit to the profitability. On the back of that, ITC, Godfrey Phillips, some of the other cigarette makers are doing very well. Adani Enterprises, on the back of their $100 billion commitment to AI and data centers, also doing well. BEL, Adani Ports, Asian Paints, L&T, Bajaj Auto, these are some of the winners. On the flip side, it's Eternal that's not doing well at all today. Eternal and Swiggy both rather on the back of the 1% charge, that levy that the Karnataka government is going to be charging on gig workers. So that will be going out from the platform company providers. So that's the reason why Swiggy and Eternal are both under pressure today, followed by Shriram Finance, Hindalco, Trent, Tata Steel. So yes, these are some of the stocks to be watching out for. But while this is only the Nifty 50 roundup that we've told you so far, my colleague Rabinder has joined us on board to take us through a deeper dive across the market and tell us which stocks are buzzing right now. Rabinder.
Well, yes, Easy Trip Planner is focus on the stock is up more approximately 20% with upper circuit. Remember that yesterday the stock was also up 20% with upper circuit, and the stock is up 55% on a YTD basis. Remember that on yesterday, company announced plans to raise a capital up to rupees 500 crore as a part of its ongoing strategy to scale key growth areas and reinforce its financial strength. So back of this stock is in focus. Ola Electric is continuing to be under pressure on the back of the weak negative brokerage note, where during the weekend company announced a Q3 result and company reported a weak set of number, and after that, brokerages started to downgrade the stock. Yesterday, MK has downgraded the stock, and today the city has downgraded the stock to sell and cut target price rupees 27 as compared to earlier target price rupees 55. They say that the EV penetration more sluggish than the expected, and Ola has a lost market share due to service issue, high competition, and adverse consumer perception. So back of this, stock is today is also under pressure, and now stock is up more than 83% from the record high. TVS Supply Chain is also in focus, where TVS Supply Chain Solution has signed an MOU with the Italy-based ALA Group to enter India's $28 billion aerospace and defense supply chain. So back of this, TVS Supply Chain is also in focus. From the defense space, Cochin Shipyard is in focus, and the stock is up more than 4 to 5%, where company has emerged as a L1 bidder for approximately 5,000 crore Ministry of Defense contract to build 5 next generation survey vessels for the Indian Navy. On the back of order win, Texmaco Rail is also in focus, where company has secured a 219 crore contract from the Mumbai Railway Vikas Corporation for the signaling works under the Mumbai Urban Transport Corporation. Stock was up more than 10% on a intraday basis, but now it is only up more than 3 to 4%. And lastly, Hindalco is under pressure where on the back of the negative brokerage note, where InCred Equity has downgraded the stock to reduce from add and cut target price rupees 631 as compared to earlier target price rupees 785. This is the peak aluminium price is not favorable for the Indian operation, and higher capex will lead to leveraging of the balance sheet. They said that the Hindalco EBITDA to decline 26,000 crore in FY28 as compared to 36,600 crore in FY26. So back of this negative brokerage note, Hindalco is under pressure, and the stock is down approximately 2%.
And thanks so much for taking us through that. So yes, those are some of the top stocks in focus right now. Other than all of these stocks that Rabinder has mentioned, it's Praj Industries. The stock is doing well after their very strong commentary where the management expects sequential margin recovery going forward. Ola Electric continues to be under pressure after MK's downgraded on the stock yesterday. It's Citi that has also now gone ahead and downgraded the stock and also trimmed the target price tremendously. KFin Tech continues to do well. The stock was up 5% last I saw. Good growth in the international business, good earnings. So KFin Tech also continues to do well. That stock is slightly simmered. It's HFCL. A good purchase order worth 61 crore rupees coming in from a large domestic player. HFCL continues to hold up pretty well. In fact, a 5% uptick on that stock. TVS Supply Chain on the back of this Italy MOU that they've signed with the Italian group ALA. So that is something to watch out for. And yes, Delivery. The company has entered into a pact with electric mobility startup Ridev to deploy 150 electric vehicles to ensure last mile delivery. So Delivery also looking very good. So while these are some of the stocks that are doing well, let's take it across to Kunal, who's joined us in the studio to get a better sense on what kind of reading that we're seeing in the market today. Kunal, good afternoon, first of all. The kind of market move that we've seen today on a day where it's the weekly Nifty expiry, we're looking pretty okay. We've not done anything exciting, but we're still above that 25,700 mark and we're still in the green to some extent. How are you reading the market move today?
Well, absolutely, yes, Snehi. Good afternoon. 3 different days, 3 different emotions for the market. Friday was one of the days where the markets literally capitulated in terms of the selling on the back of what happened to the IT stocks. Monday was the day where you saw the index showing a fabulous recovery, the Nifty coming back to that 25,500 plus levels. In fact, 25,700 mark or thereabouts is where we've closed yesterday on the indices. And today it's more of a flattish day for the index, so more or less a consolidative path the index has chosen today. But the Tuesday phenomena still persists for the index. Last 4 consecutive Tuesdays, we've seen the index actually closing on the positive side. So today could be the 5th week where we've seen this kind of a positive momentum for the index. Also lands up with the index expiry, the weekly expiry. And I think add to the fact, the most important parameter which I think is shaping up today is the drop in India VIX. Over the last 2 days, specifically yesterday, in the second half, where the markets settled back into a bounce mode, you saw the India VIX ebbing off. Today is also one of those days where you're seeing almost like a 4 to 5% drop in the India VIX. So this tells you that we are looking at the index settling at this 25,750 mark, thereabouts on the spot levels. And I think that should probably help the index, consolidate. This could also be a point where the market breadth starts to open up. We've seen time and again that when the index consolidates, you see the market breadth opening up gradually and slowly. I think that would consider to be a lot more positive for the index perspective also. So my view on the index for the very short term is more or less a consolidation for the indices but the market breadth opening up much more stronger than what you've seen in the recent past.
Okay, so that's a reading on the market, but this one sector that has gotten everyone really excited today, and we're seeing a very healthy uptick on the Nifty IT. It's the top sectoral gainer. Let's understand what has happened over here. Infosys is in focus because they have announced a strategic collaboration with Anthropic to accelerate enterprise AI adoption. The partnership will integrate Infosys Topaz with Anthropic's Claude models to build industry-specific AI agents. Ishika is joining us with more details about this collaboration. What is the growth outlook of Infosys when it comes to AI and how they plan on incorporating this within the different segments that they operate in? Ishika.
In a major move today, Infosys has announced a strategic collaboration with Anthropic to unlock AI value across complex regulated industries, and the objective will remain to deliver advanced enterprise AI solutions across verticals. Now, the focus of this collaboration will begin with telecommunications, followed by verticals such as FinServe, manufacturing, as well as software development. Now, talking about the technology integration of this collaboration, it will involve Infosys Topaz with Anthropic's Claude models, including the Claude code, and it will focus on automating complex workflows, accelerating software delivery, amongst other things. Now, talking about the industry-specific applications here, in telecom, it will focus on modernizing network operations and improving customer life cycle management. In FinServe, it will focus on faster risk detection as well as assessment and personalized customer interactions. And in manufacturing and engineering, it will focus on accelerated product design and simulation along with reduced R&D timelines. So the overall strategic intent of this collaboration is to drive transformational AI value, which will be beyond just efficiency gains, and the focus will remain on domain expertise, frontier AI models and engineering scale. Back to you.
Okay, Shika, thanks so much for putting that down for us, helping us understand what is this entire excitement about when it comes to the Infosys stock. But while we are talking about Infosys and speaking at Infosys AI Day, CEO and MD Salil Parekh said that there is massive opportunity in the AI space. In fact, why don't we go across and listen in from the man himself in terms of what is the projection when it comes to this segment all the way up to 2030?
There is a dynamic in AI services which all of you know and we understand. One, there's a huge opportunity. The one that I mentioned, the 6 areas with an external analysis, we understand that the opportunity is between $300 and $400 billion in the year getting to 2030. So over that time frame, at that time in 2030. At the same time, we have several entities have made estimates. We have our own views. The AI productivity leads to compression in IT services. However, today we have a clear view that the opportunity is massive and large, and that will become the driving force of what we will grow and drive through in the next coming years.
Okay, so that's the word coming in from the top boss at Infosys. But let's get a better understanding on how Infosys as a stock is shaping up. We'll get a fundamental as well as a technical idea on the fundamental. We caught up with Sumit Pokarna, the VP Fundamental Research at Kotak Securities earlier in the day to decode this announcement. Listen into what he had to say.
Markets are currently discounting too much disruption. AI improvements are meaningful but incremental. Current stock prices already reflect low long-term growth. So further correction could create, in fact, an attractive entry point for Indian investors. Some quality challengers may benefit from AI rather than they suffer from it. So we believe the market is pricing long-term AI disruption more aggressively than the current evidence justifies. And that overreaction may create investment opportunities for smart investors who can buy value stocks, quality stocks or good companies at a reasonable valuations. Right now, the narrative is that AI will disrupt and that will require a lesser number of working hours. The billing rates will go down, billing hours will go down. So this this euphoria, or rather this pessimism which has been created in the IT sector can take the stock prices down. They have corrected significantly. So it's a falling sword. We cannot rule out it, but it's an overreaction according to us because there are not yet full evidences available.
Okay, so that's the word coming in on the fundamental side. But Kunal, talk to us about how Infosys is shaping up on the charts. And this recent worry that we had coming in first from the US, then from the Europe, and then from China as well in terms of how the AI race is shaping up. Of course, the Indian IT space saw big cuts in the previous week. For our viewers who have missed buying into that rally, would you now suggest buying into IT? Is that something that still looks good given how positive this Infosys news is?
See, I think there could be a point where the IT stocks would be very attractive in terms of risk reward. But my only catch over here is that if the news flow is surrounding the stock prices and that's leading to a bounce, or if that's leading to a correction, then the situation is still very volatile. Now, in fact, over the last 1 week, 10 days, we've seen a 20 to 25% drop in the IT index. I think if I'm not wrong, from 39,500 levels thereabouts for the IT index, just about a month back or a couple of weeks back, we had fallen down to as much as 31,400 levels. And that's a sharp 7,500, 8,000 points kind of a correction for an index like Nifty IT, which constitutes almost 30% odd weightage, 25 to 30% odd weightage on the Nifty 50. So I think for an index to correct in that magnitude in such a short span of time will have an impact. But my only concern is that with news flow surrounding the stock prices, there could be a point where the volatility would still be there. In these scenarios, it's always better for someone who's buying the IT stocks. I think it's always better to try and fragment this into a staggered buying. So you can maybe look to buy 1/3 of your expected quantity at current levels in case if the stocks drop by another 5% to 10% broadly from their 1 day, 2 day swing highs. Then that could be another point where you may look to buy additional capital. And the third phase, I think, should ideally be deployed once the volatility and the news flow subsides for the sector. That would generally determine that we've reached a neutral point in terms of price territory for many of these IT names.
Okay, so that's the investment strategy when it comes to some of these IT stocks. But viewers, on that note, time to slip into a very short break. On the other side, we'll be joined by fundamental guests as well to make better sense of the market moves that we've seen today and what to expect in the days to come. So stay tuned and we'll be taking this conversation ahead on the other side of this break. Back with closing trades, and before the break, we spoke about the IT sector in depth. But while we were in the break, there's been a change of events, and it's actually the Nifty PSU banks that has become the top sectoral gainer right now. Very good move coming in, more than 2%. In fact, 2.25% jump is something that we're seeing on the Nifty PSU bank index today. There it is on your screen. I'm just taking a look at some of the names from this index. It's Bank of Baroda, that's up about 4%. PNB is up 3.5%. Indian Bank, Union Bank, IOB, all of these names are holding up rather strongly. But this momentum in this entire PSU banking index, we've seen even before the earnings season, but Q3 earnings have been very stellar for PSU banks. In fact, let's get you a roundup of how the PSU banks have performed in the quarter gone by. And Mitali, who tracks the sector closely, is joining us with more details on a PSU banks roundup for Q3. Mitali.
Right, talking about the public sector banks, we saw that Q3 FY26, the public sector banks have delivered an outstanding performance, outperforming the private lending space, reporting their highest ever quarterly net profit, driven by steady NII growth, also improvement in their non-interest incomes, controlled operating expenses and calibrated provisioning. Now, if you see their asset quality, we see a continued improvement both on a sequential and also on a yearly basis. Their GNPA and NNPA ratios, they have improved, reflecting sustained recovery efforts and also disciplined underwriting. Talking about the profitability, we saw that State Bank of India, it has published their highest recorded net profit and also highest among the other PSPs, backed by strong operating performance performance and also healthy asset quality with sustained margins. The net interest income, it stayed healthy across the PSB board, while some banks, they saw the NIM expansions, but margin pressure, it persists from the deposit repricing and also competition. The credit growth across the PSB board, it was quite robust, and overall if you see for Q3 FY26, we saw that it reflects strengthening fundamentals for the PSU banks, with the street also rewarding the same, as most of the PSU banks have nearly touched their all-time highs.
Okay, Mitali, thanks so much for taking us through that. So yes, it's in fact been a very stellar quarter for PSU banks. We have on the show joining us Mr. Sudeep Bandyopadhyay, who's a market expert. Sudeep, hi, good afternoon and thanks for your time. We're talking about PSU banks and the stellar performance that we've seen across the board for majority of these names in the quarter gone by. The kind of moves that we've seen internally as well as the overall index and the kind of run-up that has already taken place, do you believe there is more value ahead for the PSU banking index or some of the selective names? What's looking good, and if our viewers have missed this rally, would it still be a good time to now enter?
Well, definitely it's a good time even now to enter the PSU banks. I think their valuation gap definitely exists even today, and that's significant. And at some stage, to an extent, that gap will be bridged. I'm not saying they will have the similar valuation matrix as an ICICI or an HDFC or a Kotak Bank, but the gap today also is too much, and that needs to be bridged to an extent. So an SBI, even after this rally, even after moving up, definitely deserves to come in the portfolio of somebody who is looking at building a portfolio for the long term. Some of the other PSU banks, whether it's Bank of Baroda, whether it's Union Bank, I think all of them do look good. Look, I think the asset quality has improved. Credit growth is back. For a bank like SBI, all the subsidiaries are doing very well. Some of the subsidiaries are planning to get listed in the near future, leading to further value unlocking for the shareholders. Return on asset, return on capital. I think all those parameters, things are improving. The body language of the management when talking about possible credit growth for Q4 has also been very, very robust. So under the circumstances, there is absolutely no problem in buying PSU banks and banks like SBI, even at current levels. There are a lot of uncertainty in the whole world, in the economy, in the markets. And AI has introduced a completely new level of uncertainty amongst many companies. Under the circumstances, sectors and segments which doesn't get negatively impacted by AI and maybe positively impacted at some stage, definitely should be in an investor's portfolio.
Okay, so that sounds very good, and in fact, Sudeep is very optimistic on the PSU banking space and SBI in particular. Kunal, what about you? How do some of the names within the PSU banks look on the charts? How are they shaping up? And what would be your pecking order when it comes to these banks? Are you equally as bullish on SBI, something that has seen more than 40-45% run up in the last 6 months alone?
Yeah, I think SBI is, of course, without any doubts, the leader of the entire PSU banking pack. So, we go back almost 4-5 months in the month of August somewhere when SBI managed to break past about 825 levels. We saw the stock taking leadership, and then the entire PSU banking names revived on the back of the fresh leadership which emerged from SBI. From there, SBI has moved almost 40-50% from I think 800 levels thereabouts. It's almost at 1200, 1220 mark. And then in the context, you see many of the other PSU banking names, the likes of Bank of Baroda, Bank of India, Canara Bank, PNB, etc. These stocks have also given returns of around 30% to 25% broadly from those swing breakout points. So that I think in that context, SBI is undoubtedly one of the strongest leader in terms of price performance. But I believe now there could be a point where the others, which have the likes of PNB, etc., Bank of Baroda, which have corrected by 10% to 15% in the last 1 month or so, these stocks start to look a little bit more attractive. So yes, SBI would continue to be one of the stronger performers, but in terms of a slight better alpha or short-term returns, I would believe that names like Canara Bank, Union Bank, Indian Bank, PNB, I think these could be better bets at current levels.
Okay, so that's the take coming in on PSU banks. Before we try and understand what the private banks have done, Kunal, talk to us about something like an HDFC Bank perked up really well in trade yesterday. What is the outlook on HDFC Bank on the charts?
See, I think yesterday's move was purely a move on short covering side. That's what the data was also indicative for HDFC Bank, because the cash volumes yesterday were on the lower side for the stock price. So, just to give you numbers, I think the cash volumes yesterday clocked, I think, around 1.8 to 2 crores for HDFC Bank, as compared to an average cash volumes we've seen over the last 1 month, broadly, which have been around 3 crores to 3.5 odd crores. So, which means that the entire move yesterday was on the back of thin volumes on the cash side, and that's why I would probably believe that it could be more related towards the, either the rollovers as such, or maybe some sort of short covering for HDFC Bank. I think the bigger question over here is that there is lack of follow through for HDFC Bank even after yesterday's 2.5% up move the stock had shown. So that, I believe, is a concern for the private sector banking names, and that's why I would believe names like ICICI Bank, Axis, Kotak, as well as HDFC Bank, these stocks have shown individual 1 odd days of strong price performance up move, but then because of the lack of follow through, it's not been converting into a major trend.
Okay, so that's on some of the private banks. In fact, Mitali is back with us to tell us how the private banks have fared in Q3. Mitali.
Right, talking about the private sector banks, we saw a steady Q3 FY26 for them and marked by stable margins, also healthy loan growth and continued improvement in their asset quality. HDFC Bank and ICICI Bank, they remained the front runners, supported by strong profitability, also stable NIMs and well-contained NPAs, along with prudent provisioning seen on select agri portfolios. Talking about Axis Bank, there we saw a stable growth and asset quality, with prior provisioning support comfortable credit costs. Kotak Mahindra Bank, it saw improving growth momentum and also steady margins aided by normalized profitability. While if we talk about IndusInd Bank, there it remained selectively softer with pressure seen on growth and also on the asset quality front, though early signs of stabilization are being seen both in the MFI and also the unsecured segments. The sector-wide, if you see, the cost of funds it easing on a yearly basis, the credit cost it remained controlled, and despite mild sequential NIMs compression that we have seen in this quarter, margins they stay structurally healthy. So overall, looking ahead, the momentum in the private sector space, it is expected to sustain, with the sector credit growth projected at around 12 to 13% for FY26 on a yearly basis. Back to you.
Okay, Mitali, thanks so much for taking us through that. Sudeep, when we talk about some of these private banks, what's looking more attractive in this entire basket? Is it the larger names like your HDFC, ICICI, Axis, Kotak, or on the flip side, is it some of the smaller private banks like Bandhan, a Federal Bank? What's looking good on this from this bank?
Well, I think, if you ask me between PSUs and private, definitely PSUs. But amongst the private sector players, some of the banks where there were a lot of challenges because of asset quality concerns, particularly a bank like Bandhan, which had significant exposure in the microfinance space, had a lot of challenge in the asset quality, and the performance also was not good. But things have started improving. Green shoots are visible. So, from a valuation pickup point of view, I think Bandhan definitely deserves a look. As far as the larger banks are concerned, ICICI has been an all-time favorite, and continue to maintain our view as far as ICICI is concerned. By and large, they have outperformed the market quarter on quarter for a very long time, and I would believe that the performance of ICICI Bank will continue the way it has been continuing. Leave aside the last quarter results which they came up with, and there were some one-times and some write-offs and things like that. But otherwise, ICICI Bank continues to remain our favorite. If I have to look for the second bank, probably I'll go for Axis. I understand there is still a valuation pickup and valuation gap between ICICI, HDFC and Axis, and some amount of valuation pickup can be visible going forward.
Axis and ICICI have made it to Sudeep's radar from the private banking space. But viewers, on that note, time to slip into a very short break. We'll be talking about more stocks and sectors on the other side. So stay tuned and we'll be right back. back with closing trades. We have about an hour or so, less than that, left for the market. And one sector that is on the weaker side today and has been seeing a little bit of a profit taking in the last couple of weeks is the Nifty metal space. Even if you see today, the kind of cut on this index is 1.25% lower. It's names like Hindustan Copper, Hindustan Zinc that are some of the top losers here. In fact, Hindustan Copper is low by 4.5%. Hindustan Zinc is seeing some profit taking of 3%. Nalco, SAIL, Jindal Steel, Vedanta, Hindalco, all of these stocks are under pressure. Sudeep, talk to us about the kind of euphoria that this index had seen when silver was doing well. For the last couple of days, including today, spot silver has taken a little bit of a knock. And on the back of this, at least you have Hindustan Zinc that's also under pressure. What's your outlook on some of these names, and by when do you think fundamental strength can come back for the metal space?
Well, I have been very positive on metals for quite some time, and I maintain my view. I believe that we are in a secular upcycle as far as metals are concerned, and this is the worldwide phenomenon. It's nothing to do only with India, and this is going to continue for the foreseeable future. Under these circumstances, from a long-term investment point of view, some of these metal stocks have been great buys, and people have really profited by buying into metals. Yes, there will be volatility because we have to remember that these are globally tradable commodities, and volatility is the order of the day. So you will have one day going down, these stocks going down, and one day there'll be a rally. But if you are looking at a medium to long term perspective, I think metal is a good place to be in. Like we talked about BFSI. Similarly, metals is a good place to be in. Again, AI will not disrupt this industry, and you have to be cognizant of the AI-led disruption in multiple places. If at all, AI will benefit the industry, directly, indirectly, going forward. So, metal definitely, and some of the names you mentioned, Vedanta, have been my favorite for the last about almost a year, and it continued to remain so. The demerger of the business will lead to value unlocking. So beyond the metal rally and metal inherent strength of the metals, the corporate action also will lead to value creation. So under the circumstances, it makes sense to be in metals. As far as Hindustan Zinc is concerned, I think it's doing very well. There is capacity expansion which is coming up. Fundamentally, it does look good. Yes, price volatility will continue even in the foreseeable future. But if you are looking at long term, no harm in being invested.
Okay, so that's on some of the metal counters. Sudeep, on that note, we'll let you go. Thanks so much for joining us with your time and your insights today. But viewers, time now to shift focus to the primary market. Gaudium IVF and Women Health is eyeing its D Street debut. The company's IPO opens this Friday, and the issue size is 165 crore rupees, of which fresh issue is 90 crores. My colleague Sajid caught up with Manika Khanna, chairperson and MD at Gaudium IVF and Women Health. Listen in to a slice of that chat.
Hello and welcome to IPO Central. My guest today is from Gaudium IVF and Women Health. It's a company that's into women health care. And their IPO is opening on Feb 28th, closes on 24th, price between 75 to 79 rupees per share. It's a total issue size of 165 crores, which includes a fresh issue of 90 crores. And joining me today is Dr. Manika Khanna, who is the chairperson and MD of the company. Dr. Khanna, hi. Thank you very much for joining us on ET Now. Ma'am, can you take us through your business model? I understand that you're into women healthcare facilities. Take us through the business model and how expanded is the your business is.
Okay, great. Hi. Gaudium IVF, I am glad to say, is going to be the first from the IVF industry to be listed on the main board of the capital markets. And I would like to first highlight that the need for IVF is growing and rising by the day with increasing stress in our lives, with increasing lifestyle diseases. We are the diabetic capital of the world. So diabetes affects both the male and the female partner. with all this happening, the need for IVF is rapidly increasing as 15 to 20% of this huge 150 billion population is facing infertility issues. And right now, only 2% is coming forward for treatment, and the rest is a totally untapped market. Gaudium IVF has, worked hard and formed a legacy of 16 years. We were, let's say, born in 2009 when we started a small facility, 800 square footage, but with the highest possible equipment because of my training from both Germany and Australia. And from there, the journey has been very interesting. And 2009 to 2015-16 almost was a journey of a doctor seeking excellence. And we first focused on achieving clinical excellence and achieving success rates which are now have been consistent at 58%, comparable to some of the global best. And achieving these success rates has been possible because, we attract talent, then we train them ourselves. We train our own team in-house, all the doctors, the embryologists, the nurses. So we create the skill. And also, we are completely SOP driven. So out of the learnings of 2009 to 15, we created SOPs for every possible department, right from clinical, embryology, down to housekeeping. We laid down SOPs so that, we kind of broke down the process of IVF into like an assembly line so that it is totally standardized before we start replicating. Because my mentors in the earlier years told me, who were some leaders of Boston IVF, that, if you should replicate only when you're confident that you can deliver the same success rates across all centers without your physical presence. So these SOPs laid down the foundation for that. And that is when we decided that, okay, my entrepreneurial journey started somewhere 2017-18. And from that one center in West Delhi, which was the first center was only a couple of years. Then we had a 10,000 square feet facility center, and then we built a state-of-the-art 12,000 square feet facility, dedicated IVF space. And from there, then we started expanding to South Delhi, to Punjab. We have a hub and spoke model. So we create hubs like, for example, a city in Punjab, in Ludhiana is the hub. There are spokes in the neighboring cities. Then we went to the east of the country. We opened a hub in Patna and spokes around it. We went to the north, Srinagar hub and spokes around it. Mumbai, similar fashion, and then down south in Bangalore.
At Infosys AI Day, Nandan Nilekani said AI is a fundamental shift forcing rapid legacy cleanup and faster modernization. CEO Salil Parekh added he sees a $300 to $400 billion opportunity by 2030 and is ramping up reskilling to unlock enterprise AI value. And at the India AI Impact Summit, Ashwini Vaishnav said Indian firms now operate across the full AI stack with over $200 billion set for AI infrastructure. Global tech leaders hailed India's models as world-class, highlighting strong India-US cooperation, rising deep tech investments, and growing AI applications. French President Macron is on a multi-city India visit, meeting PM Modi in Mumbai, signing key MOUs, attending the Innovation Forum and cultural events at the Gateway of India before heading to Delhi for the AI Summit. His visit highlights deeper strategic innovation and cultural ties. Back with closing trades, and we have a whole host of experts who've joined us on the show. Of course, Kunal is still on with us, but we also have Mr. Sunil Subramaniam, market expert, and Shivangi Sarda from Motilal Oswal Financial Services on the technicals, also joining us. Good afternoon to all of you. Kunal, just before we take it across to our other guests, just want to get your view on the kind of move that we've seen on some of the names today from the broader end of the market. And if I pull up the Nifty 500 and take a look at what's buzzing over there, it's names like Dixon Tech on the losing end, but it's Newgen Software. Praj Industries. Praj is doing very well, in fact, on the back of its earnings and strong management commentary. Multiple days of gains coming in for Praj. Something that's up by another 11% today. How is this shaping up on the charts? That's Praj Industries, yes.
So yeah, I'm very bullish on the stock, and specifically, I think given the last 2 weeks of chart patterns for Praj Industries, because what happened was a month prior to that, there was this huge volume candlestick for Praj Industries, something which the stock had not seen after more than a 40 to 50% correction. Remember, I think 2024-25 highs for Praj was almost 840, 850. From there, the stock had fallen down to as much as 300 in the recent past. So after such kind of a vicious correction, the stock for the first time had seen a major volume uptick. Post that, the stock fell down back again towards a 10% correction. And now subsequently in the previous 2 weeks, the stock has seen a huge jump in terms of volumes. So this indicates that there's been a significant change of stance which has happened from the buyer's intent for Praj Industries, and this indicates that the stock is looking extremely lucrative and attractive at current levels. But over here, I would advise that don't keep a short-term time frame, because after such kind of a strong 10% kind of an up move, the stock is bound to get into a zone of consolidation because the index itself is into that kind of a range-bound mode. So I think in this context, the time frame has to be at least 3 months to 6 months or more for someone who's looking to buy the stock at current levels. But yes, I would advise a buy on Praj Industries at current levels as well as on minor dips with a potential target range, say with a 6 month plus to 12 months plus kind of a time horizon of almost 380 to 400 for the stock.
That's the take on Praj Industries, the levels to watch out for on the charts for that one. But Sunil, hi, good afternoon, and thanks for your time today. Before the break earlier in the show, we've spoken about IT, we've spoken about banking and metals. But the one sector that we haven't addressed on the show as of yet is the FMCG space, and particularly the staples, the kind of volume growth, margin expansion that we've seen across the board for some of these companies. Is now a good time to start looking at FMCG as a sector that's something more than just a defensive play? Do you believe that there are more growth opportunities ahead now that the GST impact is done? We've had the budget also that's gone by, trade deals have been signed. On the consumption front, everything looks optimistic. But what about staples particularly?
No, I would say that staples would still be secondary to discretionary, in my opinion. The reason being that, see, the GST cuts for FMCG, right, essentially are in a small pack volumes, right? So it means that the pack price will remain the same, but they'll add more stuff into it, whether it's a biscuits or, any kind of a low-end price product. So more quantity. So there won't be a saving from a customer perspective per se. He'll get more bang for the buck. You may say if it's ₹5 packet of biscuit, will get maybe 60 grams instead of 50 grams, just allegorically. So to that extent, FMCG companies, volume, if people stick to the same amount of rupee purchasing, their volumes will go up slightly. But what's hurting the FMCG is the rural demand, because low inflation in rural India means the farmers are getting less income. And so the rural is, I think, the pressure situation. So from that perspective, I would say the coming monsoon, it's probably better to wait for the monsoon. If there's a good monsoon, good harvest, people get more money in their hands, it probably give a trick. Whereas urban consumption, I don't have a problem, because like I said, the GST cuts are really felt in the urban side. That's number one. Number two, from an FMCG, one is the top line growth. This is what I talked about just now. But on the bottom line, you've got to look at commodity prices, which are the main source of raw material for them. So crude prices make a difference. Pulses and cereals, because they all go into wheat, and maida, which goes into biscuits. So you've got to look at and the international price scenario there, and where we import stuff, the rupee depreciation. So it's a combination of factors. And hitherto, it was always bought as a safety sector by FIIs. But we know that FIIs have been a selling spree. That's why FMCG has been under pressure. Because domestic investors, DIIs, don't really like it much, because India is a growth market and they'd rather buy something which looks good from a growth perspective, because valuations in India are still not cheap. So I would say that DIIs would also tend to do consumer discretionary preferentially over consumer staples. So to my view, when FIs come back, then it will be a part of their safety pick, and that's when it will get support. And otherwise, I think we have to watch and wait for the monsoon trends and how the rural economies pick up before us to really take a call on FMCG.
Okay, so lots of factors to watch going ahead, but still, according to Sunil, discretionary is better placed in this entire consumption basket than staples. Shivangi, hi, good afternoon. Thanks for your time. Talk to us about how some of these companies are shaping up on the charts. Let's start by talking about staples, and maybe we can move ahead to consumer discretionary. First, from the staples basket, among the heavyweights like Nestle, Britannia, Marico, Dabur, HUL, what's looking good and what's looking more attractive compared to its other peers in the basket?
A very good afternoon. Thank you for having me. So, very honestly speaking, these stocks have moved in a laggard manner for most part of the year, most part of last year, and we can see that the movement is kind of continuing here. They have moved in a very range-bound manner, not really performed quite significantly year-to-year basis, and from the last 3 years, in fact, we've seen that the range has been intact. So I'm not very, on the larger time frame, of course, the stocks could do well, but on an immediate basis, not very, bullish on the immediate term structure. It may move in a sideways manner, but there's no downside that we're seeing in the stocks. But of course, follow-up decisively is required for the next leg of rally to begin.
Shivangi, from some of the broader consumption themes, something like electronics, white goods, alcobev, paints, anything looking attractive from these spaces?
So definitely paint stocks have been picking up strength from the lower levels of lately. But some of the white good space stocks are also looking quite good. Voltas is one of them which has resiliently held on to the strength, and it's given a monthly basis breakout from the last consolidation of the last 10 odd months. So definitely there is a good room of potential upside over here. So this is one stock that one could look out for. And of course, we've seen that there are a lot of call writers that have unwinded their position in this one. So definitely this one's looking quite positive, and we could look at the next targets of round about 1600 for Voltas, with a support near 1500 levels.
Okay, Shivangi, thanks for that outlook on some of the broader consumption names. But once again, shifting focus to the story of the day, and it's all about AI, it's all about IT. We're still at the India AI Summit, and my colleague Prakash caught up with Padma Venkatesh of Infosys to understand the installations and products by Infosys and how it is going to be a game changer in the tech space. Here's a slice of that chat.
On behalf of Infosys, I think it's important for us to talk about that we are innovating in India, we are innovating for the world. So from Bharat to the world is how we look at it. At Infosys, our entire focus has been on talent capability. Before we talk about AI, it's important for us to make sure that every talent has the right skills, and that's where we are taking our learning pedagogy and learning style, which we have brought into Infosys Springboard, which is our societal offering. So what you will see over here is the entire platform, which is free of cost, enabled with AI features and with AI learning pathways. So even if you don't come from an AI or a technical background, you will have the complete wherewithal. There's a quick question in terms of what your skill level is, and it will go ahead and offer that. So that's as far as skilling is concerned. But after skilling, what are the different things that we are doing? When you look at the one thing that unites all of us, after cricket, of course, is a lot of sports. So here we're going to first talk about our tennis brand association, because when you look at these different associations, a lot of it is driven by data. And that's where, when we look at the entire engagement of fans, you're at home, you're looking at the experience, it's happening in terms of the TV conversation. But when you want to know the actual performance, that's where the data part comes in from Infosys, and that's where one of our tennis associations comes into play. So that's where we want to make sure that the world of sport is also touched by us. The other one that you will get to see is in terms of the Formula A. Everyone knows about F1 and what it does. Here is where, when we look at Formula E, it helps us really look at all the strategy and the data driven, and not just the speed that we are at. So when you think of Infosys, you're able to think of how AI is making a difference in the life of everyone, connected from learning to sports and more.
Okay, and of course, such products are already available in the market. So, how does these products are different from those already exist in the market?
So, for example, if I were to stay with our sports association, they are not really as commonplace as we see a lot of our other friends in the industry offer. So, these are very unique associations that we have. Also, when it comes to a host of them, we have about 12 plus showcases. Obviously, I'm not talking about all of them. The other one that you would look at is from a learning standpoint. Infosys is known to be the training ground of the industry. We are offering this completely free of cost, and what we offer our employees and clients is what we are offering the societal talent. Everyone aims to be having that Infosys train bit. I think that's the entire connecting the unconnected bit that we are taking care of.
Okay, so that's the word coming in from representatives at Infosys. But Sunil, coming to you, talk to us about how you have read into this entire move and the entire story playing out in the IT space that we've seen in the last couple of weeks. First, the massive cut coming in on these AI worries. And today, AI is the reason why the market is doing very well. In fact, the Nifty IT is doing very well on the back of this Infosys and Anthropic collaboration that we've heard. It's been such a change of events, such a turning of the tide in the last 2 weeks itself. How should an investor in the IT space move about the space? And if someone is looking to make a fresh entry now, would you be recommending that?
So yes, so first of all, let me answer yes, I would recommend making a fresh entry. But let me explain this with a little bit of background. You spoke about the last few weeks, the earthquakes which have hit the IT industry. But there's one big difference, which is that even before the Anthropic announcement and the Palantir announcements hit IT services, which led to that huge correction of whatever, 5 to 8% on Thursday, followed by another 1.5% on Friday. What had happened was that that day was actually worldwide IT services getting impacted, and India, that same impact coming to India. But Indian IT has been underperforming for a fairly long period of time because of the worry about AI. So India, because as a country we've been a bit behind on AI, the Indian companies was perceived to be very slow on adopting AI. So they have been under pressure for a long time. So my point is very simple, that if you look at it now, the correction is a bit overdone because we also got slapped with the international IT services crackdown. We also suffered, but we'd already been suffering. So even after this recovery of, let's say, yesterday and today, use 1 year return, if you look at it, IT index is down 19%. The Nifty is up 12%. So you're talking about a 31% underperformance to the market. Now, that means what? What I'm saying is a lot of the bad news about the slowness of AI absorption by Indian IT companies is in the price already. From now on, I believe that things can only get better because India is doing this big perception game with this 4-day summit about Indian AI. Second is, even in the budget you saw, there was a lot of emphasis put on the data centers, on getting AI enabled ready. And companies like TCS and Infosys and Coforge have been making specific investments in the AI space for some time, but it got ignored when the worldwide correction happened. So I think that, yes, we have moved a bit slowly as far as Indian IT adoption to AI, but I think we'll move surely. And that's the Indian habit, right? The culture. We are not always the first movers, but we are very good in catching up and putting. And all of these big companies have enough cash balances either to invest heavily in AI or to do inorganic acquisitions in the AI field. So over the next 6 to 12 months, I expect these things to come, and the perception of Indian IT as being a slow-moving elephant in this case will change. Yes, we will still be an elephant because of the size of our companies, but I think that it can only get better. So for those who already are holding it, depending on various points of time, they can take a call. But for a fresh entrance, I think you have an index where 32% underperformance with the broad Sensex or Nifty gives you enough margin of safety cushion that you can start acquiring it. There will be volatility. There will be good news and bad news coming on various days. But AI itself is more of a futuristic impact after, let's say, 2 years or 3 years. So I don't see that the current earnings guidance, they will stick to it. Their dividend yields have improved sharply. I think over the last 10 years, dividend yield was 1.5%. Today, it's more than 3.2%. So you've doubled your dividend yield. So income-seeking institutional investors from abroad and from India would also now add more IT to that. So while I don't expect a sharp V-shaped recovery in IT, I think the worst is behind us and a gradual recovery with specifically companies who come out and make a very clear-cut plan. See, until today, you saw even in the quarterly earnings, there was no specific AI mentioned by Indian IT companies. They were kind of avoiding. Today, Infosys has come and said, okay, this much percentage of our thing is from AI. So I think that clarity is very important. So the next earnings season, we'll see all the companies come out, lay out their specific AI-related plans, and there will be tie-ups with AI majors and, like I said, acquisitions. So it can only get better. I don't see much chance of it getting worse. So if you haven't already invested in IT, it's a good time to start staggered allocations across the space. And today there is still a wide disparity between large cap IT and mid and small cap. I think the correction was more in the large cap IT. So those valuations are a touch more reasonable than the mid and small cap IT companies. So I would say weight large caps a little bit more in your portfolio, but stay diversified within the IT space.
Okay, so that's a very detailed outlook coming in on the IT space. Shivangi, if I had to ask you your top pick, or let's say top 3 picks from the IT space, would it be a mix between the large and the mid cap names? Would you be tilting more only towards the larger caps? What would that mix look like?
So of lately, we've seen that the entire IT pack movement has been led by the heavyweights itself, and the small or the mid-cap IT names have, actually quite a lot beaten down from a long period of time. Although stocks like Infosys or Wipro or the heavyweights have kind of, shown strength only in the last only in the last couple of trading sessions. But then again, if one has to go for the IT pack, these are the stocks that I would be looking out for, the heavyweights only, because we've seen that clearly strength is slightly still missing here, and the people have to gain more confidence for the stock to again regain above its key exponential moving averages, at least on the daily frame. So little wait and watch here, but if one has to move into these, space stocks, then it would be the heavyweight ones.
Okay, so that's the take on what's looking good within the IT basket on the technical terms as well. But shifting focus then, you have French President Emmanuel Macron, who's on a multi-city visit to India with high-level engagements in Mumbai and New Delhi. In the latest development, PM Modi along with French President will inaugurate the H125 helicopter. Let's take it across to my colleague Anurag Joshi, who has more details on what this agenda could shape up to be. Anurag.
Yeah. French President Emmanuel Macron is visiting Mumbai. He arrived in Mumbai late last night with his wife, Brigitte Macron. And today the high-level engagements with Prime Minister Narendra Modi will start. One of the key highlights of Macron's visit to Mumbai is the signing of more than 20 MOUs. And a significant part of the MOUs are that they are related to defense and technology. And one of the key MOU will be with the Tatas for the manufacturing and assembly of the H125 helicopter, which will be used for both defense and civilian use. And this MOU with Tata Advanced System will be signed, and this will be a stepping stone in the Indian-French cooperation towards building partnerships in defense and in technology.
Okay, Anurag, thanks so much for taking us through that. So yes, lots on the agenda when it comes to Macron's visit to India. Remember, this is his 4th visit to India, coming in after 1 year of PM Modi's visit to France. And this is his first visit to Mumbai as well. He's got a very busy agenda, lots of MOUs to be signed, and then he's also going to be leaving to go to Delhi to attend the AI summit. But shifting focus from this visit, and of course we'll keep you updated with everything that happens on the course of his visit, let's shift focus, and in an exclusive conversation with ET Now's Anurag Shah, Anand Goenka, the president at FICCI, talks about India's positioning in manufacturing as he quotes that Apple's manufacturing in India was a success. Listen into a slice of that chat.
I think this is a once-in-a-lifetime opportunity for the country as the world gets realigned. The biggest opportunity lies in the taking advantage of the various FTAs that have been signed. We've signed 8 FTAs and the mother of all Ds with EU. So how can businesses look at entering these new markets at lower duties? And second is with respect to partnerships, technological partnerships between the developed world and the developing world is something which we must take advantage of.
Okay, on the manufacturing thing also, because with the China plus one strategy, how much ready and prepared we are on the manufacturing front?
I think we've seen the success of Apple in India, where at one time we were hardly producing any products. Now maybe 20 plus percentage of all iPhones are produced in the country. We can do precision manufacturing, high-end advanced manufacturing, and to that extent the country is fully ready. We have the labor force that is there. We have an enabling stable government and a shift towards high reforms. With all of this, I think whether it is China plus one or India standing on its own, this is our time.
You have said very interesting point about the quarter से क्वार्टर तक हमको नहीं सोचना होगा, तो हमारे हिंदी के जो करोड़ों दर्शक हैं उनके लिए समझना चाहूँगा क्वार्टर से क्वार्टर तक जो आपने एक नई बात कही है, तो किस तरह से कंपनियों को, कॉर्पोरेट इंडिया को अपना दृष्टिकोण बढ़ाना है, बदलना है और लंबी अवधि के लिए सोचना है, रिसर्च के ऊपर हो और बाकी चीज़ों के ऊपर हो?
Kabhi we take a call in the very short term कि I have to make this kind of ROI, I have to make this kind of EBITDA. But sometimes investing in R&D, investing in technology, investing in brand, you may make lower margin in the lower term, in the short term, but in the long term, the benefits are far higher.
Okay, और सर आखिरी सवाल होगा सर, विदेशी निवेशकों के लिए सर आपका क्या संदेश होगा और FIIs जो हैं, FPIs जो हैं, वो भारत को किस तरह से देखें, वो कैसे आकर्षित हो सकते हैं?
I think, again, we are seeing policy stability. We have the demographics, large market, macros are very strong, inflation is low. To that extent, I think this is, again, the right time to be in India. And I would be in this country, this time, this place, over anywhere else.
Okay, so that's a very bullish outlook coming in from the top boss at FICCI. When we're talking about manufacturing, Sunil, weigh in over here. Talk to us about India's manufacturing prowess. Where do you think we as a country are heading in terms of manufacturing, EMS, data centers? These are some of the top themes, and of course AI that we've spoken about that are surrounding market conversations right now. Where do you think the future lies when it comes to some of these themes? Where are you seeing value in the market in terms of some stocks that could do well?
So I wouldn't talk about stocks, but let me talk about the thing that, see, Indian manufacturing, I would say, I know I heard Mr. Goenka speak now, but I think one of the key things to remember is that technology-wise, productivity-wise, skill-wise, we are still nowhere compared to China. And if you look at China's history and how they actually achieved it, because 20, 30 years ago, China was known for very poor quality products. Now, India has never been known for poor quality, but China was very bad. How did they become so very good? It's because of foreign direct investment. It's because American and European MNCs came and set up factories in China. And over a period of time, the technology transfer took place. Then Chinese engineers and everybody stepped up, and Chinese owned companies absorbed that and became world class. So India has to follow the same journey. And for that, what the government's role is to first get the infrastructure and keep your FDI policy liberal for it to come. And that's where in the budget you mentioned data centers. The government giving a tax holiday till 2047 for data centers. So the route for Indian manufacturing is, I believe, through foreign direct investment, the foreign capital coming with factories. The biggies of the world come in and set up, which the data centers is one step in. He mentioned Apple, right? It's because Apple chose India and that technology came in. It's not a homegrown thing, but over a period of time, we will get there. So I think that the clear path I see is wherever the government is opening the doors to foreign investment into India, foreign manufacturing comes and sets up with the localization component. For example, the Rafale planes, right? The new deal signed has a 30 to 40% localization. That's how Indian technology will develop. So I believe the step one in all of these places, if you are to compete in this new age world with high skill manufacturing, it has to come from partnerships with foreign and Indian companies, right? And then standalone over a period of time, Indian. So the space is there then, and even an automobile, right? With the India-EU deal and everything, we're dropping tariffs on their vehicles to come to India. Even with the US, that's going to happen. But we should get them to come and set up their plants here, right? So that's the way I see going forward, manufacturing, right? In one space, however, India on its own has definitely demonstrated its skill, the Atmanirbharta, and that's in defense. If you look at the drones and the UAVs, there without a foreign partnership, our engineers and scientists have developed state of the art. So I'm not saying that we can't, but it's a slower journey. It succeeded very well in one space, but on a broader basis, you want to create the employment. And mind you, even the Apple, if you look at it, what happened? It started with just assembly and then going up the value chain. So I'm saying it's a slow process, but definitely that's the way we are headed. So I would say that from a medium-term perspective, manufacturing is the space that we have to invest, but FDI is critical. So I would say that's probably the trigger for Indian manufacturing too.
So that's the outlook going ahead. Shivangi, we have a couple of minutes left for market close. Very quickly, today has been a very stable expiry day for us. Where do you see the markets opening tomorrow for the rest of the week? Are we headed for a stable week? At least, is that what the charts are indicating?
And the indices have held on, not to jinx it, but of course, we've seen that there has been a good comeback of the bulls, and there has been buying, which has been consistently seen throughout the trading session today. So overall, that is quite positive, and we will look at 25,500 as the important base here, which will decide the next stance for the index. But of course, we're heading into the monthly expiry week, so some volatile cues will be expected. But there are some call writers which are present at 26,000, which needs to unwind their position for the next fresh short covering move. So definitely, we are heading towards 26,000 levels, but the support of 25,500 would be important to watch out, and buy on decline to continue in the index.
Decline is the call coming in. Shivangi, Sunil, on that note, we'll let you go. Thanks so much for taking the time out and joining us with your insights. Viewers, about a couple of minutes left. Let's start winding down for the day and take a look at how the markets have panned out. About a 0.1% uptick coming in on the Nifty today. 25,720 is where we are at right now. Sensex also 0.2% higher. Nifty Bank continues to gain steam. 0.4% uptick now on the Nifty Bank. And India VIX continues to cool off even further. 5% cool off coming in on the India VIX. From the Nifty group of stocks is Adani Enterprises on the back of their AI and data center plans. ITC on the back of channel checks coming in from brokerages indicating that ITC and other cigarette stocks have taken sufficient price hikes to now dodge the impact of the excise duty. BEL, Infosys, of course, on its Anthropic partnership. L&T, Asian Paints, Adani Ports doing very well. On the flip side, Hindalco under pressure. It turned on the back of that 1% gigs workers rule coming in from Karnataka under pressure. Trent, Tata Steel, Cipla, Shriram Finance, these are some of the stocks from the Nifty basket that are under pressure. Sectorally, today has through and through been the days of the IT stocks. About a 1% uptick over there. The defense index has picked up very nicely, 1.5% uptick on Nifty Defense. PSU banks also doing very well now, 2.25% higher. It's names like BOB, Bank of India, Indian Bank, Union Bank, Bank of Maharashtra, all doing very well from that pack. You have FMCG, Auto, Media, Pharma and Nifty Bank touted to end in the green. On the flip side, big cuts today coming in on Nifty Metal, a 1.25% cut over there. Nifty Realty, Finance and Energy. These are some of your sectors in closing in the red. On the flip side, if you take a look at some moves coming in from the broader end of the market, it's names like EIL that are seeing some profit taking today after 2 consecutive days of double-digit gains coming in. Brainbase, Hindustan Copper, SRF under pressure. On the flip side, good move on Newgen Software, OneSource Solutions, Praj Industries continues to gains on robust earnings and management commentary. Aegis Vopak, Force Motors, PCBL, Thermax, HFCL, Paytm, Delivery, all of them seeing gains, including Kims, Whirlpool, Acme, Sonata Software, all seeing gains between 3 and 8%, and Newgen is up 11.5%, so looking very strong over there. This is how we're shutting shop for the day. The news makers, of course, IT stocks, cigarette stocks, Cochin Shipyard, Texmaco, Ola Electric, KFintech, all of them have continued to be in focus throughout the trading day, but this is how we're shutting shop for the day. Nominally above the 25,700 mark and a dash in the green is how we're shutting shop. On that note, we'll wind it up on this edition of Closing Trades. From me and the team that put this show together, thanks so much for tuning in.
In association with SBI, the banker to every Indian truly.
Noise. There's a lot of it these days, especially when it comes to technology.